This is really going to have two very big impacts. Big impact number one is it's going to make better on-chain assets, which is going to make them more attractive and create bigger markets for them and benefit the actual entire industry. And the second thing that it's going to do is it's going to massively reduce the risk of owning those assets, because you go from a 1-year window of verifying things about the asset, not to a 1-month window, but to a few seconds window. And this window shortening eliminates something called the gap problem. And the gap problem is when you basically have a period over which you can conduct fraud. If that period goes from a year to a month to a day to 10 seconds, your window for fraud just went away, basically. And that's one of the fundamental problem of making reliable assets. So the proof of bill and our work on proof of across different asset types will really allow for the most reliable assets to come out of the US financial system. And just like the US legislated into existence risk agencies, we think it should legislate into existence this proof of bill to make sure that the financial products generated in the US system are fundamentally better and fundamentally more reliable, because they require this high level of proof of information. And this goes very well and in line with the current model of what makes the US financial system reliable, which is highly reliable assets with a certain level of regulation and information requirements. This is basically just continuing that, but doing that in an on-chain way that massively benefits the consumer, the market, and eliminates systemic financial risk.